We are diving into a company that really defies any easy classification. Genius Group, GNS.
Yeah.
If you've been watching the market at all, you know the story is, well, it's dense. It's this perfect collision point. You've got high growth ed tech, but it's blending with the absolute bleeding edge of AI and digital assets like Bitcoin.
And all of that is happening against a backdrop of this incredibly intense, high-stakes legal confrontation.
Yeah,
It is truly a unique mix.
it is.
So for you, the listener, our goal today is really just to cut through all that noise and pull out the critical insights. We have to understand the two narratives GNS is telling.
Two narratives.
Yeah. One through their standard financial books,
Yeah.
and a completely different one through their operational story. We need to grasp their aggressive shift into digital assets, and critically, we need to map out the catalysts coming up, which are all driven by insider moves and this litigation.
Okay, so let's unpack that first piece. GNS isn't just another platform with online courses.
Not at all.
They are very deliberately branding themselves as an AI-powered, Bitcoin-first education platform. That's a huge claim. What does Bitcoin first even mean for them day to day?
Well, what's fascinating here is that this whole strategy is designed to carve out a really novel and, they hope, highly defensible niche.
Okay.
It's about merging two of the world's most rapidly expanding sectors, right? Global education and decentralized finance.
Yeah.
So Bitcoin first means they're integrating blockchain and crypto into their curriculum.
Especially for financial education, I imagine.
Exactly. And also, crucially, into their corporate treasury strategy, which we can definitely get into more in the financial section.
But they're doing more than just digital stuff. They are actually buying resorts and land. This is where I start to get a little skeptical. They call it the Genius City model.
It's ambitious, to say the least. Look, you just have to look at their move into Bali. In November 2025, GNS acquired a controlling 51% stake in two projects there, valued at about $14 million. This is how they build the physical part of that Genius City model, integrating physical education and incubation ecosystems with their digital platforms.
So they want people to actually go there.
They want to create real-world spaces where their global entrepreneurial community can meet, learn, and even live.
I see the vision, creating a whole sticky ecosystem, but I have to challenge this. How quickly can a high-tech edtech company successfully integrate a physical hospitality business? I mean, that sounds like a massive management distraction.
That is the core risk,
Yeah.
and it's a very valid one. Successfully managing physical assets, hospitality, real estate, it's just a fundamentally different game from scaling a software platform.
Completely different.
It is. However, the successful closure and integration of the Entrepreneur Resorts acquisition they did before suggests they have at least some experience in this hospitality education overlap, so there is a precedent.
Okay, and their strategic moves aren't just acquisitions. They're big on branding, too. Bringing on Robert Kiyosaki.
The Rich Dad, Poor Dad author.
Right. As a board advisor, that seems like a perfect, if aggressive, way to validate their whole focus on financial and entrepreneurial education.
Oh, that partnership is pure strategic branding. Kiyosaki's name instantly validates their brand in that financial education vertical, which is just foundational to the entire Bitcoin-first story they're trying to build. But look, this strategic vision, it's enormous. AI, Bitcoin, physical resorts, it all begs the same question.
How's the bank account?
Exactly. How healthy is it? We need to look at the money, and this is where GNS gives us two very different stories, one for the accountants and one for the investor. And perspective matters dramatically here.
Let's start with the standard GAAP view, then. This is the messy side of the story, right? This reflects all that pain from restructuring and acquisitions.
The GAAP reality is challenging. Revenue for the trailing 12 months stood at only $5.75 million.
Which is down sharply.
Down very sharply from 2023. And on top of that, the net loss for that same period widened significantly to negative $34.63 million. These numbers are a lagging indicator, though. They tell us about the intense costs of their growth initiatives.
Here's where it gets really interesting, though, because management wants everyone to focus on the pro forma view. This is the story they're telling about their future. What do those numbers show?
And this is the key. The pro forma revenue, which adjusts the financials as if those recent acquisitions had been integrated for the whole period, that actually increased 25% year over year in the first half of 2025.
So that suggests the M&A growth plan is actually working under the surface of all that GAAP chaos.
It seems to be, and they're backing that up. They reaffirmed their guidance for a 50% revenue increase in 2025 on a pro forma basis.
So the tension is clear. GAAP shows the transition risk and the cost, while pro forma shows what management believes is the real scale.
Precisely. And for an investor, Deciding which story is more important really is the entire investment thesis. But there are crucial signs of financial control, even with those huge losses.
Like what?
Well, despite the widening absolute net loss, the company reported a remarkable 57% decrease in net loss per share in the first half of 2025. That indicates that as they scale, their cost discipline is actually improving pretty dramatically.
Now let's talk about that Bitcoin first identity from the balance sheet side. Are they really putting their money where their mouth is?
They absolutely are. The overall balance sheet is getting stronger, with total assets up 20% to $121.3 million. But critically, they've doubled down on that pro-crypto treasury policy. They've increased their Bitcoin holdings by 22%.
So how much do they have now?
They now hold 180 BTC as of July 2025. This isn't just, a rounding error on their books. It's a deliberate anchor validating their commitment. But it also introduces another layer of asset volatility that you have to track.
Wait, so they're building an education company on future assets and holding their reserves in a volatile asset like Bitcoin? That sounds like maximum strategic risk.
Or genius.
Right, there's no in between.
That's exactly the narrative tension here. It signals incredible confidence, but it also absolutely raises the stakes. Shifting gears a little, the stock's near-term price trajectory isn't just about financials. It's heavily influenced by three other interconnected factors.
Okay.
You got visible insider confidence, a unique shareholder loyalty program, and, most dramatically, this aggressive litigation.
Let's talk about the CEO's conviction first. We've seen a massive pattern of buying activity, which is usually a pretty strong signal.
It's very strong. Since June, the CEO, Roger Hamilton, he's purchased 1,150,000 shares total.
Wow.
Including a block of 200,000 shares he bought in October at $0.86 a share. But what's more important is what he's doing with them. Over 90% of his shares are locked or restricted and are being moved to the direct registration system, or DRS.
Okay, let's pause right there for a minute. For anyone who might not deal with market mechanics every day, what is DRS and why is the CEO moving his shares there?
Right. So DRS stands for Direct Registration System. And this is a really crucial tactical move because it means those shares get registered directly in the shareholder's name, not held through a broker system.
And what's the effect of that?
Well, when the CEO moves his significant block to DRS, it signals absolute long-term commitment. And more importantly, in this kind of high volatility environment, it takes those shares out of the system where they can be easily loaned out by brokers for short selling.
And that DRS move, that connects directly to this really unusual Bitcoin loyalty payment program they're doing. This isn't just about rewarding shareholders. It seems designed to influence the public float.
Precisely. This program requires shareholders to transfer their shares to that same DRS system to participate. And the company has set a key cutoff date that's looming on November 28, 2025.
So it's a strategic move to lock up shares.
Explicitly. It's designed to incentivize retail share retention, boost engagement, and strategically reduce the number of shares available for trading and potentially for short selling.
And then we have the legal confrontation. This is the definition of high drama. They filed a federal securities class action and our IACO lawsuit. So why is this company taking on major financial firms, and what is our IACO lawsuit in this context?
A IACO lawsuit, that's the Racketeer Influenced and Corrupt Organizations Act, it's usually reserved for things like organized crime. So by using it in a securities context, GNS is making a really powerful, aggressive claim.
Who are they going after?
They're going directly after major market makers, specifically naming Citadel Securities and Virtue Financial. And the core of the allegation is market manipulation.
So naked short selling, spoofing, that kind of thing.
That's right. GNS is seeking at least $250 million in damages. And this positions the company uniquely in the public eye as a defender of retail shareholders against what they allege are predatory market practices. It's an enormous risk.
It has to be. I see the upside. But focusing on a $250 million legal case against two of the biggest financial players, that must be draining significant resources. Does the potential payout truly justify the legal costs and the distraction for the execs?
That is the trade-off. It is a gamble. Management is betting that the recovery, both financial and in shareholder loyalty, outweighs that operational distraction. They see it not just as a lawsuit, but as a strategic pillar to align themselves with retail investors.
So let's just outline the critical dates that listeners should be watching over the next 3 months, given all these moving parts.
Okay, first and foremost, mark down November 28th, 2025. That is the DRS participation cutoff for that Bitcoin loyalty program.
Got it.
Secondly, in February 2026, we expect Q3 2025 earnings results. And those results will be crucial for validating that pro forma momentum we talked about earlier.
And the lawsuit.
Yeah. Finally, speculation is going to remain really high around the progression of those legal cases. Any major filing or court ruling could be an immediate catalyst.
So after all that, what does this all mean? GNS presents a very high growth but also very high volatility opportunity. You've got these strong pro forma growth projections, these strategic pivots toward AI and Bitcoin, but they're counterbalanced by clear operational risk and this massive, intense legal drama.
The core levers shaping the near-term future are clearly that insider buying, the deeper integration of Bitcoin into their treasury, and the outcome of the litigation. The technical outlook suggests some underlying momentum is building, potentially positioning the stock in a bullish range between, say, $0.00 and $1.50.
But with a big caveat.
A huge one. Because the volatility is extremely high, this thesis is really only suitable for risk-tolerant investors who are comfortable with quick swings and significant legal ambiguity.
You know, we see Genius Group actively using its Bitcoin treasury and this loyalty program to fundamentally engage and reward its shareholder base, forcing them to lock up shares. Beyond just GNS, how might this trend of integrating digital assets into corporate finance and shareholder rewards fundamentally alter the relationship between public companies and their retail investors in the future? That's something to definitely keep an eye on.